Hi everyone, and welcome to another episode of A Day in the Life of Forex Trader. So, last week I took only one trade because I was busy. I was quite busy and I didn't do much. So, this is on follow up on updates on the phase two account. All right, on the phase two account of my next level funded, and it's quite a great journey. So, currently one trade so far on the phase two account to 2%. Then I lost about four trades so far. I lost four trades so far, and it's quite a great journey. It's quite a great journey. So you can see the account. Um, you can see the account. So the account is still active. Platform Match Trader Phase 2. Release the profit split. So my equity currently is 9,828.40. So I'm down with about there is 900, 100, and I'm down with about $170 at the moment. 170, $130, sorry, 170 or so, 170 or so. So my drawdown currently have um 828. Once I blew this 828, I think the account is gone. So this is my average winning trade, 238. That is the trade I won. Then average loss 1%. So total trade so far is 5. I lost 4, won 1. To get average IR is 1 is to 2.33. So the average win rate is 20%. So this is the average loss that I've used so far. So that's just it. So without wasting much of a time, let's move to the chart. So we have this is what I normally trade. It's very simple. This is what I normally trade. So if it were before this account, I would have lost this account because then I don't have proper risk management. Okay, I don't have proper risk management. But now I risk accordingly. I risk if it's 1%, it's 1%, if it's 2%, it's 2%. I don't just dive into. And one thing that slowed me down that I come to realize before, I use market order, which is totally wrong. Totally wrong. Remember, this channel is for journaling, building, and documenting. So now I know better. So this is what I normally trade. I trade the internal range and external range liquidity. So this is for today. This is what we are expecting the market to do with 4 hours time frame. GBP, JPY. This is what we are expecting the market to do. That I'm expecting, this is my outlook. Everybody have their own what they call it. Everybody have their own what they are expecting on the market actually. So this for me, this is a 4 hour time frame. I already uh, took my daily range and everything, so I just want to brush through. So this is the 4 hour model that I trade. 4 hour fair value gap. Price I'm expecting price to move. Sorry, yeah, I need to brush. I'm expecting price to move from here to here, right? From here to here. Then in at this 4 hour fair value gap, I want price to reach this the midpoint. At the middle, price will rally a little bit into the midpoint, then start to move upward. That's what I'm targeting. All right, so here now, this is what gave me the confirmation that price will come back to fill this fair value gap, and because I already have a break of market structure on the 4 hour time frame. So now I can decide to go down and look what the market will do. There are series of liquidity up that I know I'm expecting the market to grab. You get. So my draw on liquidity is very is here. I'm targeting all these highs. I want price to come there and take them out. That's what I'm targeting. That's what I'm targeting. But this is my first draw on liquidity. Then the other one here. So now when we go to the 1 hour time frame, so the 1 hour time frame, you can see what price is doing, right? See what price is doing now. Price is trying to come. Now we can also refine this fair value gap. We can also refine this fair value gap to suit to match with that of the 4 hour. You can see there's another fair value gap here, which is what for the H1. H1, there's another fair value gap here, H1. That's it. So I'm expecting now I can look for setup down into this fair value gap. I can look for a sell down into this fair value gap before aiming for what? For a buy. Before aiming for a buy. So it goes both ways. That is the internal range and the external range liquidity. So I can still look for a sell down here. Alright. So now let's go to the 15 minutes. So the 15 minute also, there is also a fair value gap here for the 15 minutes. All inside the all of them is aligning with that of the 4 hour fair value gap. So there's also a fair value gap here. There's also a fair value gap here. So you can see from the 15-minute fair value gap. Let's see what do we have from the 15-minute fair value gap. You see, there is no okay, my entry model is not here actually. My entry model did not form actually, but I know here price is going down to like to come here first. Price will rally down here first, then before I move upward. You get one move upward. So I normally stop at the 15-minute time frame. I use the 5, 3, and 1 minute as my entry. So let's go back to the 4 hours. So there is a alignment, there's a time frame alignment. See, so this is a good confirmation that price is drawing down into this 4 hour fair value gap, because there's alignment between the 4 hours and the 1 hour and the 15 minutes. So this is a great setup that we'll be looking at once the market open. Then if the setup presents itself, you get setup presents itself, we are in. So now the checklist is very simple. You wait for market to hit your point of interest, then you wait for go down to the 15 minutes or 1 hour for another break of market structure. If you want to use the 15 minute, you can wait for another break of market structure. Then once the market change structure, then go down to the lower time frame, look for entry, refine and enter. You just have to target 1:3. So it's very simple. So this is what we're looking at. And also for the gold, I don't really have anything serious per se on gold, because all through last week, about from Wednesday, we were hoping that the market will move into this 1 hour fair value gap, right? Well, sorry, daily fair value gap, which the market actually did yesterday, which on day for yesterday, which is on Friday, market which is on Friday. Then it violated the fair value gap. Now there is still the daily order block. There's this other block, this last bearish candle, price traded into it. So there is OB here, this OB, the OB, there's other block. Now price currently at the other block. So I believe market will still go up. Market will I don't know, everybody have the way they think and everybody have the way they see the market. The markets, I don't think the market will sell that much, yeah, because from the 1 hour there's there's a liquidity level here, there's a liquidity level here. Yes, so this other block has already been filled with this one. So there's a liquidity level here. Some you can still use some persons may actually still use this one now as get still the other block here. Yeah, it's a single. Some person might actually want to use that as the other block. You get, so as the other block here. So but for me, I know what I have in mind is price will stop at here. From this other block, the price will rally upward. You get, the price will rally upward. So I'll come back to this. If the market plays exactly the way I said, then it's fine. If it doesn't, then we'll still go, because just like you're feeding your eyes daily with data, the more you feed your eyes, the more you see this stuff playing. You get, one of the stuff that I normally do is I try to stay at the chart to see what the market is doing on the chart. You get, so it's very simple. If you can watch the 4 hour chart to print 4 times a day, you see a lot to unveil itself in the market. So that's just it for the gold. I don't have much data on the gold compared